Hi friends, Srinivas here. This is the fifth video of the technical analysis series. So basically today we are going to discuss about stop loss, which is a very important concept. So basically stop loss is exactly what it says. It is the price at which we will exit trade to literally stop our losses. Okay. So let's take an example. Okay. So I'm going to go to our trading view and let's take an example of Infosys on 10th April 2019. Assume that we are on 10th April 2019. Time traveling replay tool and come and click here, and we don't want to see anything which happens in the future. So if we just press this, then this is the situation where we are at. Okay. So few things that we need to notice that in the primary trend for us is weekly trend, because we usually trade once in a day. So the primary trend for us is weekly. So you can see that from September of 2017, it has generally been an uptrend. Yes, there has been a low during November of 2018. Generally, you can see that the prices have moved up. Of course, there are undulations in between, but the weekly primary trend is an uptrend till now. Okay, so let me just get it till here. Let me just extrapolate it a little bit, and you can see primarily the price is an uptrend. Okay, so starting from here if you want, and you can see there have been some undulations. So the primary weekly trend is an uptrend. Okay, so and let's also look at what the weekly MACD is doing. So I'll go to indicators. I'll add the MACD. So you can see that weekly also, that is in the primary trend, or what is known as the tide, the MACD blue line is above the orange line. So this is a bullish sort of situation here. Okay. So we'll go back to our daily chart. Okay. And in the daily chart, we will notice that, we need to watch the price action. The price action also has been sort of going, improving and sort of in an uptrend if you see my mouse cursor here. And we can also look at the volumes. So we have the volumes here. Of course, in the past few days, it's below average. And we can also look at the DMI ADX. I'll add that also. So this is the other indicator we talked about. So it is, you can see that the blue is above the orange. So here it is actually giving us a buy signal, and MACD daily also, you can see blue is above the orange. So it's a bullish signal. So all we have to do is wait for a green candle with a good volume to take our trade. Before that, there are some things to note here. So if you look at this level around, let's say 767, right? There is a good amount of resistance given. So I will just do Alt H here, and I will just go to the settings. I'll go to style. I'll make this dark green, and I will make the dashed line, and I'll put it as there is a resistance at 767. Then I will go to the coordinates, and I'll make this 767. And then I will go to the text again. Ensure that the tag is at the top, not at the center, but at the right. Okay, so here's your tag here, resistance on 767, and hit OK. So you can see that this stock price just tried to go above 767. It couldn't. Then there is a lot of support from this trend line which we have drawn before. It went below the trend line. Then again it tried to break the 767 mark, and again it is trying to retest that mark right now. Okay, so that is the situation. And there is also support at this point. So if you look at it at around 707, you'll see that the stock price has received good amount of support. So let me zoom in and show it to you. If I put a line at around 707, if you see this line again, I'll do Alt H, and I will go right click, settings, style. Okay, maybe I'll give it a little brown color, make it a dash line, and I'll put it at support at 707. I'll go to the coordinates. I'll make it 707 here also. I'll say okay. So you can see that the price did a lot of retesting. Then it broke down. Then it became a resistance. Then that resistance got broken down here. And again this is giving some support to this stock price. Okay. So now we will wait. Go ahead and see where we get the green candle. So let's start that. Okay, so here we got a good candle with a good body as well as above average volume. So this is 30th April 2019. So here we can go for a buy. So I will hit Alt B to mark this. Okay, so basically it closed at 751. So I'll buy it 752. It closed at 751.35. So I'll buy it at 752. So I'll again do Alt H, and I'll go to settings, style. This time I'll make it dark brown, and I'll make it a line, and I will go to the text, and I'll say buy at 752. Okay, coordinates also I'll put it at 752. Okay, so here's where we are going to buy, and we are going to expect and hope that the stock price goes up. Okay, but here comes the point of stop loss. Suppose that the stock price comes down instead of going up. That is, suppose the stock price starts falling instead of going up like we expect. What we'll do? See, every business or every trade or any kind of transaction always has its associated risk. Okay, so we have to take the risk with the reward. Okay, we will talk about our targets. We'll talk about our risk reward ratio shortly. But for now, it is enough to understand that if the stock price starts falling instead of increasing, then we need to exit this trade without incurring more losses. Okay, so what we will do is we'll put a value around 735, and what we'll say is, if the stock price doesn't go up and starts going down and it falls closes below this particular value, then I am going to exit the trade. I will take only restricted amount of losses is what we are trying to say. So basically, how do you put stop loss? So whatever your weapon candle is, that is the candle with a good body and a good volume on which you are trying to buy, its lowest value. Either it's a close value or its lowest value, you can choose. So what we are doing is, since the wick of this candle, the bottom wick is not there, we are choosing a few points or few rupees below the closing point. Okay, so we are choosing 735 rupees to be our loss. What we are saying is, if the stock price falls below 735 or closes below 735, we are going to exit the trade, and we are going to accept that we have incurred a loss in this trade, and we are okay with that. Okay, so that is what we are saying. So I will again do Alt H. Okay, then I'll say okay. So we are all set. We know that we have a stop loss at 735. We are going to buy at 752, and let's see what happens. So on the next day itself, unfortunately, it closes below our stop loss. Okay, so we have to exit this trade. Okay, and as we discussed, our loss will be right. We bought it at 752 and sold it at 735. So there is a 17 rupees loss for us. Okay, so you can use the measuring tool and see that. So 17 rupees loss for us, but it is good to take this loss and exit the trade, and instead of waiting and the price falling even further and we incurring more losses. Okay, so that is the point of stop loss. Using stop loss, we are saying that we know that we'll incur this, there is a risk of this much loss, and since it has happened, we'll take that loss and exit the trade instead of staying in the trade and losing more. Okay, so let's see what if would have happened if we didn't exit. Okay, so if we didn't exit, you can see the price is going still down, still down, still down, still down, and we would have incurred more losses. Okay, so this is the exact reason the stop loss has been designed for. Stop loss has been designed so that the trader can exit the trade with a calculated risk instead of suffering more and more losses. That is why it is called stop loss. Okay, so the trader must have a stable, even mind. He must not feel bad. Okay, he must basically take it with a positive spirit and say that yes, I lost this round, but I win the next round. And he must exit the trade. He or she must exit the trade, and he or she must re-enter later. Okay, so basically, when do we re-enter later? See, basically, if you see the stock, what is happening here? There is a strong support at 707, right? And so there is a lot of probability. With great probability, we can say that it's not going to fall below 707. Okay, so if we see a green candle with good volumes around 707. Okay, can we not put some stop loss below 707, and can we not re-enter the trade? That is what we're going to do and see what happens. Okay, so let's wait for a green candle. Now we have exited the trade. On the same stock, we want to take another trade and sort of recover our losses. Again, we must not be obsessive about this. To recover our losses, we must do trade with an even mind. So that's what we're going to do with all the rules, following all the rules. So we're going to wait for our green candle. Okay, so there is a green candle on 16th May 2019, but again, the volume is not there, so we are not going to rush and buy here. We want to wait it out. Okay, so let's keep on going. Again, we are waiting for our good green candle here. Okay, so okay, now we got a green candle. Okay, whose body is good, right? It's got a large gap between the opening and closing. And its volume is also good. And the date is 28th May 2019. So on this day, we can definitely try another trade. Okay, so I'll hit an Alt V to sort of mark the day. And again, just like what we did before, this is closing at 728.1, so I'm going to buy at 729. So let me do an Alt H here. Okay, and the coordinates, I'm going to make it 729. Okay, so we're going to buy here, and what should our stop loss be? See, you can see how the sort of the stock price is moving around this support line 707. So sometimes it try to come below it, and there was a low point at which the low wick pierced this line. Here also low wick pierced this line, and here also sometimes if you see my mouse cursor, there was a close here at 701, which is below this support line. So what we are saying is, let's take the stop loss below this support line, maybe around again, it depends on the experience of the trader here. Some traders might say I will go close to the support line. Some traders will say no, I will take a stop loss which is much further down, because I expect the volatility of the stock to be very high. So it is depends on the aggressiveness of the trader and his experience as to where he sets his or her stop loss. But basically, the idea is whatever your candle is, the on which you are trying to buy, because of which you are trying to buy, the bottom, the close or the low part of its wick, or if there is a support which is lower, a little bit lower than the support, is what usually traders go with. Okay, so what we will do is, in this case, we'll go a little bit lower than the support, which is 707. We will say that we'll set a stop loss at 698, for example. Or 700. So let's set a stop loss at 700. I will hit Alt H again, then I'll go settings. Okay, so this is our stop loss, which means that if our stock price closes, remember, if it closes below 700, we are going to exit the trade again, like we did before. So let's see what happens this time. So you can see that luckily for us, the price is going up and up. So we wait and watch. So looks like there is here you can see a bearish harami happening. This is the mother, this is the womb. So it is as though the reversal is about to happen. And even if you look at basically if you look at the DMI, it is approaching, it is turned down, right? It was going up, now it's turned its direction. MACD is also turned its direction. So let's sort of watch very carefully, because at this time, we must be really sure what is going to happen. So we must watch the stock daily very closely. bearish harami happened, but again we are being careful, waiting and watching. Again, there's a green candle, there is a doji candle, and now very interestingly, we have got a hammer at an uptrend. Okay, so this is what is known as a hanging man. This is a as we discussed before, very likely that there is going to be a reversal happening here. Okay, and also you can see that the blue line has started going back towards the orange line here. Okay, if you see my mouse cursor, so this is a very good indication of a reversal. Okay, note MACD is not giving you a reversal signal yet, because it is a lagging indicator. What do you mean by lagging indicator? See, the MACD curves are calculated based on the price of the stock, which are previous days, right? So 12 days before, 26 days before, 9 days before. So that's why it is a lagging indicator. Okay, so it will not give you an immediate signal. Okay, but the DMI is definitely turned back towards the orange line. So a reversal might be possible soon. And secondly, we've got a hammer in the uptrend, which is called a hanging man. So this is indicating a reversal. So what I'm going to do, I'm going to sell it here. Okay, so again, I'm going to do alt edge here. I'll make the style as purple. Okay, and I'll make the text to be centered so that it doesn't collide with the other text. So sell at 753. Okay, so once we sold at 753, second time buy at 759 and sell at 753. So the profit we made is 24 rupees. So we can go from here till here. Okay, so you can see that the profit is 24 rupees. Okay, so we lost 17 rupees before, but we made it up with 24 rupees. Okay, so that is per share we have made a 7 rupees profit. Okay, so this is how we need to have our stop losses. We need to have a stable mind and ensure that even if the trend goes reverse of what we think as it did in the first case, we should exit it. We should exit the trade. Okay, and then re-enter the market and ensure that with a stable mind we have recovered our profits. So that is what is the point that we wanted to communicate, and we wanted to communicate how the stop loss works and how the stop loss is dependent upon the bottom wick or the closing price of the or opening price of the candle, as well as if there is a support, how we have to place the stop loss a little below the support. So these are all the discussions we wanted to do. Okay, we'll continue in the next video. Thanks.